Our next guest leading an international supplier of LNG to China and the broader global market. Shell CEO Wael Sawan joins us now. Wael, it's great to have you back on the show. How do you think, first of all, the trade fight between the U.S. and China and potentially broader than that is going to impact oil prices and production?
I think what it'll do is we're going to have an extended period of uncertainty and I suspect some volatility. Supply chains are rerouting. You see energy markets are rebalancing at the moment. And of course, the threats of sanctions and tariffs and challenges in certain global arteries like the Red Sea just means that we're trying to find a new equilibrium to be able to deliver energy. The biggest question is going to be the impact on the economy and what that means for markets. As a company, what we have really focused on is building resilience in the company. And you'll have seen from our results last week, the big focus was really continuing to deleverage, have the strength to be able to actually weather whatever uncertainty brings in the next few years.
Does it get offset for you at all by the fact that, the Trump administration has been very bullish on further LNG expansion?
No, I think and that's one of the things we welcome from the incoming administration. The role of LNG is going to be critical for the coming years for multiple countries. So I do think what is going to be key is making sure that we find those balances. And we are indeed one of the largest players, the largest international energy company in LNG. And the key is having multiple supply points, of which one is the U.S., but there are multiple other supply points, and making sure that we are able to actually match our customers' demand with the supply that we are able to access.
What do you see on the demand front at this point?
We continue to see strength. Actually, we see right now tightness for the coming year at least. There hasn't been a lot of net new capacity coming through in 2024, and we're not expecting a lot of it in 2025, though the demand continues to strengthen. Driven by things like, for example, LNG into trucking in places like China and India, but also industry. And you see that happening across the world. Europe, of course, is growing its demand for LNG because of the interruption of Russian supply. So we are bullish on the growing demand for it. And at least in 2025, the markets will remain tight until new volumes come through from Qatar and the U.S.
Well, have these new wrinkles in sort of the evolution of technology and DeepSeek and so forth pushed you to reconsider your long-term power forecasts, at least for North America?
I would say the picture is still evolving. What is clear is that the demand for energy is going to grow and that AI and what it brings will undoubtedly have a strong push on that demand. The question is just the quantum. Is it going to be a doubling or a tripling between today's demand for data centers by 2030? And so it's really more the range, not the direction. What we are doing is making sure that for all the opportunities we are pursuing, both in the renewable side as well as gas supply, we're locking them with customers whom we trust to be able to have a long-term perspective on this and managing through that uncertainty in a way that allows us to manage the risks that come with the volatility that's ahead of us.
So at this point, the investments and the CapEx and the build out, you don't think we're in the neighborhood yet of being over our skis over the long term?
Difficult to say. The approach we're taking, I have to say, is one of more of this disciplined approach at the moment. I mean, we're slightly sort of controlling more of the capital because what we see is that uncertainty that I referred to earlier. And in a period of uncertainty, my own belief is focus on what you can control and build resilience and strength because you don't know what the weather of tomorrow is going to bring. That doesn't mean we miss out on opportunities, but we also have to be able to sort of keep an eye on where things are going. And at the moment, it's just too foggy to be able to make a call one way or the other as to what the trajectory is going to end up being in the next few years.
What about Russia-Ukraine? What are your expectations of what's going to happen there? And what's the impact, if any, on your business if they do come up with some sort of deal?
Again, difficult to call exactly what will happen there. I mean, what's clear is that let me focus on the energy bit of it. From a gas perspective, Europe really needs gas, which is why these LNG flows into Europe matter. And of course, the sanctions or the potential extension of the sanctions on Russian oil, not to mention Iranian oil, will also create some imbalance in the crude oil markets. And so we're the largest energy trader in the world, and we're beginning to see some of those disruptions play through. Now, of course, while that creates uncertainty for people depending on oil and gas, for the largest energy trader, it creates opportunities as we look to rebalance those trade flows around the world. So we see quite a bit of opportunity as well emerging from that as we monitor the situation and try to understand the discontinuities that are taking place.
I mean, the other big wild card, of course, is the Middle East, and President Trump sort of renewing maximum pressure on Iran, talking yesterday in a joint news conference with Benjamin Netanyahu about the U.S. taking over Gaza. I just wonder how you are calculating what's going to happen there and what it means for oil and gas production and supply.
We haven't seen a huge impact, even through the very difficult last couple of years in the Middle East. We haven't seen a lot of interruption to physical supplies of crude. It's been more than plugged by many other locations. And so we see that less in terms of the physical impact on crude. What it does, of course, do is the uncertainty that plays out there and the potential spillover impacts around the world, including economic impacts. That is more the area we look at. So a proxy we keep a very close eye on is, for example, demand in China, how the industrial sector is behaving in Europe. Those are the second order influencers that we keep an eye on, which I think will impact, at least in the medium term, the demand for energy.
Well, there's also OPEC, right, and how that might affect their strategy and how, I mean, President Trump in his Davos speech said he's going to pressure OPEC to lower oil prices and ramp production. What do you expect to happen there?
All I can expect is what I'm hearing from OPEC as of their decision, was it earlier this week, which in essence is they're going to continue with the plan that they had. Clearly, the key elements, of course, that are impacting the overall picture at the moment are Chinese and global demand and the decision by OPEC. Once again, I mean, our focus is what we can control. And so what you find is as that uncertainty continues to unfold, all we can do is to make sure that we have more and more points of supply that we are able then to link to the multiple customer connects that we have. And in a world where those connects become tougher for others to be able to deliver on, that's where Shell can differentiate itself and where we are trying to position ourselves as a company, that connector of energy between suppliers and customers.
A lot of moving parts. Wael, thank you for taking the questions. So much to get to today. Appreciate it.